All right. As people kind of pour in here, thank you for joining us on this Friday afternoon, sort of a midday happy hour of sorts. We're joined by Sami Kassab, research analyst at Messari, and founder Greg Osuri of Akash. We'll start off with a quick disclaimer here before I throw it to our speakers. All opinions expressed by our hosts and our guests are merely their own opinions. They do not reflect any endorsements or opinions of their companies. This discussion is meant for informational purposes only. You should not take their opinions as investment advice, as you'll be solely responsible for your own investment. Hosts and guests may hold cryptocurrencies discussed in this Twitter Spaces. Additionally, certain Messari employees are required to disclose their holdings, which is updated monthly and available at our website. I will share a tweet, as always, with those disclosures. But without further ado, I'll kick it off to Sami, and he'll give us a short preface before Greg introduces himself.
All right. Thanks for that, Doug. Hey, everyone. My name is Sami. Like you said, I'm a research analyst here with Messari. I specialize in Web3 infrastructure. And we have with us today Greg Osuri. And I'm really excited to have Greg on for this Spaces because personally, I feel like he's somebody who's actually focused on the long-term vision of the space and actually the original ethos of the space, namely decentralization. He's also a builder. He works on his own protocol. He also understands the state of the crypto ecosystem right now because he's not just siloed in his own project, but he also contributes to multiple different areas in the overall ecosystem. So, Greg, welcome.
Thanks so much, Sami, for the introduction, and super excited to be here.
Yeah, so it's been an exciting past few weeks. Some bad events, some good events. We just had the merge, which was successful, but we also, have had some negative regulatory events, specifically with the Tornado Cash incident. And so, just to give a little bit of a primer on our discussion. So last month, we had the U.S. Treasury come out and they sanctioned Tornado Cash, the protocol. And for those who don't know, Tornado Cash is a currency mixer on Ethereum. And basically what that means is it's a transaction privacy tool. And for me, I saw two problems with this right away. One, it was that, our right to privacy is at risk. But two, which is the topic of this discussion, is it really demonstrated the lack of decentralization in the crypto ecosystem, because immediately what we saw RPC providers like Alchemy and Infura basically take down their RPC endpoints for Tornado Cash. We saw cloud hosting providers stop hosting the front ends. We saw their GitHub get taken down. Even some USDC got frozen in some contracts. And I'm sure I'm missing a few other actions that were taken, but it was a real shock to the community. And so the question I have for you, Greg, is post sanctions, what was revealed? How decentralized is crypto in reality, and what kind of implications come with that?
Right. So I think it's fairly obvious post sanctions that crypto is not a single monolithic layer. It's actually multiple layers, right? Broadly speaking, I think you can categorize crypto as a three-layered system where you have the access points. The access points are essentially how people access these crypto products through DNS, through front ends, basically that's tied to a DNS. And then you have the data layer. Data layer is the layer where the data is stored, and the rules of writing to the data, the rules of where the data is stored, is essentially the decentralized part, right? So, different blockchains offer different levels of security, Bitcoin being the most secure one, and Ethereum being the most secure application layer, right? Application layer for data storage. And then you have the base layer, which is the layer where you have the databases, essentially the state is hosted and state is processed, right? So if you think about it, even though the data layer is decentralized, the access layer and base layer is clearly not decentralized, right? And we saw that as a proof point. With it really began with silent enforcement. I think from the time when Uniswap Labs started censoring or delisting certain tokens that the U.S. Treasury thinks should be delisted, to all the way to the recent OFAC ban, which basically said any U.S. person or U.S. Related entity should not interact with Tornado Cash, in the sense it should not um, do a transaction. Right? They clarified later, saying that it doesn't really matter. I mean, visiting the website is okay, actually publishing the code is okay, just not conducting a transaction, that's illegal. The problem with that approach is, like, I mean, the intentions are very, very good, right? I mean, obviously, there's a lot of evidence that Tornado Cash was used for illicit purposes, especially by North Koreans to launder money. And there's a lot of evidence that Tornado Cash was used for illicit purposes. But Treasury banning Tornado Cash is not going to prevent Tornado Cash from being used for illicit purposes. So you know so the extent of the ban is questionable, and it's obviously being challenged right now. Really, what the impact of the ban really brings, right? It prevents Americans and American associated entities, may not to provide liquidity or whatnot, but there's a whole world out there that has nothing to do with the U.S., right? So my question is, like, by banning um, Americans from using Tornado, how are they solving North Koreans not using Tornado Cash, right? So the answer is, crickets, right? Nobody knows, right? So I think, like, if you really want to prevent North Koreans from using Tornado Cash, there are other effective ways that haven't even been explored nor discussed before the ban happened. So my concern really is that this ban happened without a lot of thought. Even the approach, I mean, even the developers, American developers working on Tornado Cash, were not approached by the government. I know this because I know a few of them, and so they just woke up one day and the thing was just on the OFAC list, right? And no arrests, no detentions, no communications at all with the developers. I wish the government would have been a little more involved in, like, solving the problem, but again, I can't speak to U.S. government. Um, and and uh, and so that's the base, that's the front end, and then the over compliance came, right? So yes, government bank compliance is important. Over compliance is dangerous. Over compliance, where you had essentially alchemies and infurers, even the so-called decentralized networks, such as Pocket, all of them sort of like came and said, we're not going to enable Tornado Cash hosting of any form, even though, I think Treasury came out recently and said it's okay. I mean, you're not really doing a transaction, you're not really calling like a exchange, right? But it doesn't matter. You can interact with the code and you're okay with it. But still, GitHub went and banned Tornado Cash repositories. Even the government says it's not illegal, but they just over compliant, and they even banned the users, the accounts of contributors. And the worst part is they're still charging them money. You know, so it's like the effects of, like, OFAC. OFAC is is the highest level of, like, I think sanctions, right? That anyone can put anything on. The effects are like these complete disregard for what the law is, right? Over compliance, and there is this breakdown of the centralized system on the whole. Now, I feel like if we have a more decentralized systems, there would be a lot more real effort in actually preventing bad actors, instead of instead of what we have right now, which is a pseudo decentralized system, in the sense the access points are not decentralized, even though the core system is decentralized. And it's easy for government to be like, hey, use the Web 2 tools, Web 2 mechanisms to ban, but not really a Web 3 mechanism, right? Like, um, so um, so my take is, like, we got to do better in decentralizing access points, and be Web 2 or Web 1 kind of solve this. Like, if you really look at internet as sort of like this decentralized system with original intent of avoiding single points of failure, you had companies like AOL, companies that actually went ahead and like created these choke points. But the world came around, the market came around and rejected those choke points. And it went again back to decentralization. Now we are seeing the opposite, where you have heavy concentration of compute power by few providers, right? So there's this constant battle, I feel like, the internet goes through over its series of phases. And Web3, what we are seeing is not something new. This happened before, and I think the best solution is not the government intervention; is really the industry self-correcting, and it's starting to happen. Like on the same side, right? You had on one hand you had U.S. Treasury that banned Tornado Cash, which is a privacy protocol. On the other hand, we saw U.S. military DoD embrace Secret Network and Akash for enhancing their privacy, right? So like and this is within 30 days of the ban, right? So it's very clear that someone like U.S. military, which really cares about protecting their privacy, and their use case was essentially developing a solution where they can send secure documents between units, not using without using mail, and maintaining sovereignty for the privacy they have. Very clear use case on how to enhance the privacy. They actually researched and worked on it, and they found use for it, right? So I guess we are so sort of like we're seeing the government embrace crypto in different ways, and depending on who you talk to. I think military has an amazing viewpoint as to how they view Web3 and whatnot. So
Yeah. And I think a key point of what you said as well was that when these Tornado Cash sanctions were put into place, we also saw some decentralized protocols, and I'm putting decentralized in quotes, take action as well. And that's partly because there were some single points of failure in there, some centralized points of failure. But it really got me thinking, assuming that these protocols were completely decentralized with no single point of failure, isn't there still like the project or dev team that government entities can go after? Because I think people have this vision in crypto where, oh, if we completely decentralize, you can do whatever you want, and a little bit of like an anarchist view, but so basically I think what you're saying is like there will be regulations, but they need to be balanced. Is that kind of what you're getting at?
so there is law and there is sovereignty, right? I mean, like decentralization doesn't mean you can do whatever the hell you want. Decentralization means you have a lot of control on what you do, and the control, what you do with the control is up to you, right? So I mean, like anything, you can use for good things or bad things. Like if you use for bad things, I think decentralized systems are way better than some centralized systems to be able to track down, right? Like I'll give you an example with Akash Network itself, right? We like a big problem that keeps me up at night is like, okay, Akash is permissionless system, anybody can deploy anything on it. What happens if something really bad gets deployed, like something like child pornography or something, right? Like for that, I think like ultimately providers on Akash Network are responsible for the content they serve, and they should be able to moderate like any other provider, right? And there are a lot of moderation tools that are in play, and this is a jointed effort, I guess. A lot of the decentralized UGC platforms, right, user generated content platforms, should should make it easy for their users to use. And So yeah, decentralized systems doesn't mean you got to break the law. I mean, it actually it's a very powerful tool for law enforcement to trace you back, right? So I think like because everything is online, right? Like so, in fact, you saw people like TRM Labs or people like Channel Analysis make a very strong case on how they were able to help law enforcement a lot better than a closed centralized system. Um, yeah, that's really where my stance is on like censorship resistance and versus like compliance, right? Like, but again, what is law? Law is different based on jurisdiction. Like something like child pornography is universally shunned, right? Obviously, every country in the world, I don't think there's a single country that would encourage people to do that, right? And if you are hosting that, you should go to jail. But other, policies depends on the country, right? So it's you got to comply with whatever jurisdiction that you have to comply with. And Akash Network ultimately is an IP address, right, that hosts a piece of content. The IP address is still IPv4 or IPv6 that has some association in the centralized database. We have not gotten to a truly decentralized IP based networking system. It's still TCP/IP underneath the hood, right? So as long as you connect to TCP/IP, I think it's you're easily traceable. And I'm pretty sure any other technologies that would be higher levels of abstraction would still trace you back, right? So
Yeah, completely agree with you on that. I like how you phrased that. Kind of moving the conversation now towards a little bit on the node centralization. So, in some of my research, I've seen that I've dug into the top two ecosystems, being Ethereum and Solana, and what I've seen is that their node infrastructure are largely hosted on like a handful of big cloud providers. And so, kind of running through some data that I collected about a month ago, like ETH nodes were on, or the percent of ETH hosted nodes, you had 50% on AWS, 15% on Hetzner, 4% on OVH, and then looking at Solana, you had 42% on Hetzner, 26% OVH, 3% on AWS. And I think sometime around last month, we also saw Hetzner come out and basically make a statement saying that any crypto-related services or apps could not run on their cloud, and it violated their terms of service. And so, like, there's obviously risks here. How do we move forward?
right, the risk here, I mean, so the cloud providers, first of all, why crypto node, runners or miners prefer cloud providers is because they're easy, right? They're easy to get started. They're very convenient. I mean, they've matured over time. They've gotten really good, right? They scale well. They've, you know, they've come along a lot, right? And they're like, manageable when it comes to cost. They're not the least, most cost efficient option, but they're manageable if you can sort of like make a case for productivity versus cost, right? Especially in a bull market where everybody's making a lot of money, you don't really care about like the cost, right? Things are changing quite a lot now. But the problem is reliance on a single provider. So it's very, very rare you will see node hosting companies use multiple providers, right? Or and have any sort of failover between these providers. So disaster recovery becomes a huge problem if you rely on a single host, right? And node designs by design, they do not actually encourage multi-regional deployments because there's always this risk of like double signing, yada yada yada. There's inherently a failure in the node design for the most blockchains. I know this for sure in Cosmos nodes that prevent you from a multi multi-regional deployment, right? And I think that's the bigger risk. Like, there's an argument to be made, like, hey, well, 50% of nodes, cloud hosts, nodes run on Amazon. If Amazon shuts down Ethereum, you can all move to like some other cloud, right? Yeah, in theory, it's possible. In practicality, you're going to see disruption. There's going to be a several day, if not weeks, levels of disruption with degraded services. The real question you should be asking is that the future we want, a disrupted blockchain? Or like Lido has about 50% of node power, right? It's a pool, granted, but I guarantee you they're hosting probably on a single provider, right? I mean, I haven't seen anything to indicate they have. At least it's not public. I don't know the internals, but it's not public that there is a multi-cloud disaster recovery strategy, right? So what like we I think the big risk is, well, you have like disaster recovery and just like fault tolerance and failover. And second risk is cost, right? Like the if decentralization is expensive, it's prohibitive. And cloud is getting worse. And this is article, beautiful article by Anderson Horowitz recently called the paradox of cloud cost $1 trillion paradox or something. And they've studied several companies that they are part of the board, and turns out 50% of every dollar you and I spend on online services like Asana, like Netflix, like you know, uh, uh, yeah, Notion or whatever goes to Amazon or Google. 50%.
The Amazon tax.
The Amazon tax. It's invisible tax that we all have. And guess who pays the bill? I mean, we end up paying because the costs and savings come down to the user. Right? And that's one data point. Another data point is there is the death of data centers, right? So before in 2018, you had about 8.4 million data centers. Now you have about 7.1 million data centers. So the hyperscalers are getting a lot more, a lot bigger because there's really, really very, very little options to get cloud-like capability on data centers, right? So you can either have a data center or you can have a cloud. You can't use your data center capacity as a cloud provider. That's a big challenge, right? The convenience is a challenge, not the compute. Right? Even though there are 7.1 million data centers, why do we prefer the Amazon 16? Why? Because Amazon just has a better way to deploy tools, right?
So what's the main difference there, if you don't mind breaking that down between like the data centers and the large clouds? Like
correct. So when you have a data center, like let's say colo, right? So for deploying a box in a co-located data center is number one, you go to the data center and you strike a deal. You say that, hey, I want to put a rack of servers in your cluster, and I'm going to go purchase these servers from Dell or wherever you want to purchase, configure them, send it to your actual physical data center, and purchase all the disks, and lease the space in your physical like data center, and have you plug in my computers and and manage them for me, change the disks when they need to, and when they're make sure there's electricity, make sure there's like a enterprise grade like internet, yada yada yada, right? And I'm going to pay you X amount of dollars per month. So to acquire a box, a server using this colo method takes about anywhere from 1 month to 3 months, right? So it's very, very expensive. It's very time consuming, but the advantage is it's a lot of capex and there's very little opex, right? So you own the box. You can do whatever the hell you want with it. So it's very cheap to operate once you have it, but to acquire them is very hard. And then if you don't have enough demand, you end up paying for the box, right? So there is this like acquisition problem, and then there is retention, sustainability problem, right? So that's why people prefer versus a cloud provider where you basically pay by the hour. There's no acquisition problem. There is no maintenance of the box, and if you don't like the box, you switch to another configuration in a matter of minutes, and you pay a premium for that, the cloud premium, right? So it's great if you want to get started, and if you're not sure what you need, and if you want to get quickly, if you want to go to market quickly, you use a cloud provider at a premium. But if you want something permanent like a blockchain, you shouldn't be using, because a 3 month time in a blockchain is worth it because you have complete control over cost and complete control over privacy and yada yada yada. So what Akash comes into play and does, I think, is really enables you to have your own data center. Why that gives you sovereignty and control, and offer sell any unused capacity you have in the data center to people that want to use it, or tap into a larger pool when you want to scale, right? So I think like the danger of like using a single provider and is basically like, and you have outages, right? And in fact, I didn't realize Wikipedia has a dedicated page for Amazon outages. The last outage was data loss outage, right? Even though Amazon's great and probably the best solution out there, the The problem is this heavy concentration of compute power no matter leads to outages all the time. It's just the nature of the beast. It's very, very, very hard to scale, to manage scale at Amazon level, right? So you're going to have someone that's going to hot finger a piece of code that shouldn't be there, cause an outage. Right? No matter how many processes you have, you're going to have faults, right? And the scary part of running crypto infrastructure on a centralized provider is like these outages will lead to disruption. In some cases, the outages, I mean, in some cases you have outright bans by someone like Hetzner that basically said if you deploy anything in crypto, you got to go out. But that is policy driven by some suit that has no idea, sitting in a boardroom somewhere, right? Like you have that censorship level attack, you have like outage level attack, and then essentially you have supply chain attacks, right? Like supply chain attacks in the sense like you really have no idea what you're getting in terms of box. There's no auditing. There's no external person giving you. There's no third person looking at is this box kosher or not. There's really no way to know what Hetzner box you're deploying or who has access to the box, and they tell you, it's safe or whatnot, but it's no way to know, right? So there's this just like obscure obfuscation attack, right, that you can incur while running on the centralized provider. So the question you should be asking is this the future you want for crypto, or is there a better one? Can we work as industry together?
Yeah, and you already highlighted kind of the main value proposition that I see with Akash, which is that multi-cloud capability, right? So like, and just the simplicity that comes along with that. You can just choose multiple providers when you're kind of like onboarding onto one of them, and that just increases, the resiliency. And back to what you said about like if any data is lost, you still have like a backup somewhere else. And so Akash is currently hosting a lot of nodes right now, right? Could you are they also hosting like are you able to host like an Ethereum validator on Akash at this time, or is that something that's still in development?
No, you totally can. I mean, it's I think we're going to show a demo very soon. It's capabilities wise, we have for a little background, we launched Akash platform a year ago. When we launched, it was ephemeral only in the sense you any data you store on Akash will only live during the life cycle of the deployment or the lease. So once the lease ends, your data goes away. Or like if there is a restart, there was no like network storage so it takes forever to like sync back. Now we have network storage, which makes it ideal for a lot of nodes because nodes have a lot of huge, state files, right? Ethereum alone has 300 gigabyte state file, I believe. 300 gigabyte state file, which is humongous if you think about it, right? If you have to like sync every time you have a restart. With network storage or persistent storage, you can sync once and you're good to go. And we're also going to optimize for local snapshots within Akash network itself. So downloading a ledger will not be an extraneous process. It'll be very, very quick, probably way better than Amazon because they're not verticalizing, right? And we are verticalizing very soon. And a big feature that was missing was dedicated IP addresses. This is especially important for protocols that have fixed port ranges for service discovery and whatnot, like Solana. So, and with Akash, so far you were getting dynamic ports because IP address space was being shared between deployments. Now we have IP address leasing. It's currently in test and it should go into production after mainnet, after Messari mainnet, in a few weeks. So, but with that, I mean, you can start testing in testnets right now. It works really well. You can get dedicated IP addresses, and there's a whole process for providers to be able to get the ASN blocks. And I learned a lot about IP addresses in the last few weeks. So the providers do the heavy work of like getting you a block of IPs, and you can choose an IP and have dedicated ports. This enables a lot more nodes, like especially like my favorite handshake nodes, right? Handshake is essential DNS. Then you need port 53, which is a privileged port. And now with Akash, you couldn't get that before, but now with IP address leasing, you can actually have a port 53. And Solana runs on port 8000, 8100, and plus one or minus port range. Now you can have Solana running on Akash. And ETH will run exactly like the way you would run on a centralized infrastructure, right? So the node hosting is coming with a bang. I think IP addresses will complete the solution we needed. And and GPUs are next. So if you have any GPU style proof of work style workloads, I think that's going to be supported as well very, very soon. So we'll have a complete node hosting solution. Uh, you know, like a full-fledged node hosting solution, and next would be just user interfaces, right? Like, and we want to develop non-custodial user interfaces, and that's very, very critical to access these node hosting platforms. And we have a little surprise at Messari mainnet. Our head of product, Anil, who by the way is it's going to blow you away with the demo. He came from HashiCorp. HashiCorp, for those of you who don't know, is a leader in infrastructure. I mean, they created this tool called Terraform, which a lot of people use. Vaults and and like, so he was actually the leading Terraform effort. So he's a very, very, very in tune when it comes to like developer experiences. So we'll be showcasing a tool during Messari talk, Anil's Messari talk. So, and I think you'll get an idea as to where the state of node hosting is, and the non-custodial node hosting is, and I think you're gonna like it.
That's awesome. I'm definitely excited for that, and it's great to hear all these developments on Akash, like you were saying about persistent storage, because I feel like it couldn't have come at a better time as we're seeing these regulations and sanctions, and just mainly this like centralization, and all these like large cloud providers continue to grow, and people starting to ask themselves like, okay, what's an alternative here? What can we use? And I feel like Akash is perfectly positioned here to offer a alternative solution or an alternative method. And one thing that you kind of mentioned earlier too is that like during the bull market, it's kind of just like a theory of mine, but I feel like most projects, they were just trying to build as fast as they could, right? So like that kind of led them to just go like the centralization route. Let's be honest, most people were focused on just like number go up, just get this thing launched as fast as possible. And now that we're in this bear market where, validator earnings, for example, might have gone down, and you're still stuck with potentially a high price or a high cost at these cloud providers. Now there's people probably rethinking like, okay, is there a cheaper alternative here? And to them, I would say, go check out Akash,
Mm-hmm.
But so I guess to kind of bring this full circle back to what we started talking about. So if you had to like kind of prioritize where the industry should start to decentralize first, like would you say it's like the DNS layer, like RPC endpoints? Is it storage? Is it front ends? What should the industry be focusing on first?
Yeah, I think it's in the access layer, right? Like, so.
Yes.
I mean, base layer is I think base layer is developer facing, access layer is consumer facing, right? So base layer, you have a lot more control. I think using platforms like Akash and Pocket, when they're going to like decentralize, I think they have V1 working, which is a decentralized version. You have several other decentralized players that are actually getting good, right? Um, there's another layer that I haven't touched. It's called the supply chain layer. I'll get into that in a bit. I think because supply chain layer touches both. I wouldn't call it a layer. I think it's more of like a vertical, right? It touches all three systems, all three layers, right? The supply chain, decentralization. But I think base layer is getting there good, but not too much work is going on in the access layer. There is a proposal that there's an update on Akash on how to decentralize the access layer, like really decentralized, not just do IPFS hosting, because IPFS is great or to host like static applications, but very, very limited, right? So you can't really do um, uh, server-side rendering, for example. You have a React app, right? So without server-side rendering, you're going to just create like very clunky applications that are not good for consumers, right? So you don't have middleware support. You don't have a lot of like, uh, cloud level support that enhances user experience. So you need that. You need to solve that. And so I think we're going to see. So what we're working on, Akash, is something called interchain accounts. So interchain accounts allows for different blockchains to call Akash in a fully on chain, right? Not using off chain. So essentially, a Juno network smart contract on Juno network, which is written in CosmWasm, can own a deployment on Akash. So that means you can see smart contracts owning deployments on Akash. That means DAOs can now own deployments like Akash without a human involved. So now DAOs can do front ends, right? Or they can host a node. If there's a DAO for node host, like a validator DAO, can directly host uh, on Akash, and now the human attack vector is eliminated, right? So if you had to take it down, you had to take down the smart contract. That means if you have a voting mechanism to take down, depending on how your DAO is structured, if you have a voting mechanism to take down the smart contract or the deployment, you can use that. Or if you design your smart contract in a way it's immutable, that means a lot of good smart contracts. I think developers once they deploy them throw away the keys, right? The deployment keys. You have an immutable smart contract. The deployment becomes immutable, right? So I think stuff like that is going to push the boundaries of what censorship is going to look like. And if you combine something like that with Handshake, where you have discovery layer decentralization, which is a huge problem, you can still have DNS as attack vector, right? We saw that with GoDaddy being hacked. We saw that a lot of these DeFi protocols would use GoDaddy DNS, and there would be like a attack every now and then where they would they would change the DNS using clever social engineering techniques to change the DNS, and that's a huge attack vector, right? So moving to Handshake now can give you this immutability, and now add that to the supply chain in the sense like the supply chain is like where the code gets produced, like GitHub, to all the way to where the code gets published or deployed. We need to have a verifiable, composable supply chain for crypto, right? So if you talk to anybody that maintains a large repository, they will tell you the problems with GitHub. GitHub is not optimal for large open source projects. Even Linus Torvalds hates GitHub because he just doesn't, even though he created Git to be a decentralized system, and he personally hates the pull request mechanism of GitHub. So GitHub was not designed, GitHub is a centralized version of Git, essentially. Git is great, Git is decentralized. GitHub made Git easy to use, right? So uh, GitHub is a SaaS platform for lack of a better word. So there's a lot of amazing things you can do with Git itself. There are a few projects, Gitopia, Radical, and a few others that are decentralizing Git in itself and bringing Git back to the original roots by adding decentralized collaborative functionality. And you can imagine a code contributor that's anonymous or is private can contribute on Gitopia or on Radical and have that code base automatically built and deployed to either IPFS or Arweave or Akash, depending on different assets. If you want immutable deployments, permanent deployments, Arweave is a great option. And have that running on Akash by a smart contract, so you have unstoppable deployments now, tied to a Handshake domain for discovery. And as long as you're using Handshake, you can access this website and have a fully verifiable supply chain end to end. That way, you can have a coin gecko that will basically show the smart contract saying that, hey, this is the smart contract. It's verifiable. It's a real front end. It's not a fake front end. You don't have Sybil attacks. And something like Brave can even do further verification because all that is on blockchain, right? And that is the level of supply chain decentralization that we need in order to like remove our reliance on centralized entities. And big attack vectors here are like DNS level, source control level, deployment level. There's so many different levels that so many different attack vectors before it gets to decentralizing access layer that we need to solve. And things are moving along pretty good, right? I mean, the Radical folks and Gitopia folks and some other Git decentralization protocol, they're all moving very fast. They're all trying to get this problem solved. I think within a year or 2 years' time, you're going to see a beautiful, interoperable different protocols working with each other, fully verifiable, fully on-chain, like world, right? And that's a world I can't wait to experience.
Yeah, that was going to be what I was going to ask is like, how long until we see some of these protocols like able to use this fully decentralized supply chain? I love that term supply chain. I was kind of thinking of it more as like a tech stack, but yeah, at the end of the day, it is like a supply chain. But so you're hoping like a year, 2 years out, these protocols will be mature enough to where we can kind of see a fully decentralized tech stack or supply chain, if you want to call it that.
In fact, so interchain accounts will go into production. Interchain accounts are currently in testnet for Akash. They'll go into production with mainnet 4, that's post Messari mainnet. Not to confuse mainnet 4 mainnet, but anyway,
Yeah.
so we have Akash mainnet 4 that's releasing in 3 weeks after Messari mainnet, and that'll have interchain accounts. That means you'll start interoperability. Like an account on Juno network, a smart contract essentially, which is an account, can own a deployment on Akash. We're also working with Secret. Secret is the other project DoD used. So imagine secret deployments. You can have a secret smart contract own a deployment on Akash, right? Fully private deployments, right? And that's the level of sort of like that's the level of interoperability interchain accounts is going to bring. And I think with interchain security coming to Atom, it's going to take another level because now Atom Hub users can deploy directly on Akash that is not a app chain. So you can essentially have a Ethereum smart contract ultimately deploy onto Akash, right? With MOS, basically with EVM support, now you can see EVM-based smart contracts deploy on Akash. So I think the interoperability is just going to make deployment on Akash take it to the next level. Now you have all chains that can effectively deploy on Akash without having an Akash account, right? You can do, there are online swap mechanisms that we're working on with whatever tokens that, as long as there's a liquidity that can swap from one token to another token on chain, you can essentially have that be part of your smart contract to deploy on Akash. So it's starting to happen. It's not like a year from, it's literally like 3 weeks, right? Like we will have this capability. I mean, integrations will take a few more months. But I think in the next 6 months, we're going to see a cross-chain DAO-owned deployment on Akash, right? And DAOs are amazing because now you can even think of like profit sharing. Like if you're a node operator, right? Like you can have a DAO that operates a node completely controlled by by the smart contract, and the proceeds can go back to people fully on chain, fully verifiable, right? I think you're going to see quite a lot of these kind of like profit sharing, decentralized, fully on chain applications using a lot of compute power, arbitrary compute power on Akash to do amazing things. And DAO is deeply integrated. DAO is a DAO framework on Juno. There are over 4,000 DAOs, and they're deeply integrating Akash right now with interchain accounts. So it's really exciting.
Yeah, I'm beyond excited based off what you just said. I think everybody here is excited based on that future interoperability. I think you made a great case for DAOs to use Akash. It almost seems like a no-brainer. I think that's a perfect place to kind of wrap it up. So I just want to say thank you very much for joining us today, Greg. You provided a lot of great insight, and looking forward to seeing you at Mainnet.
Yeah, I'll be on mainnet, I think, on day 2 of the speaking. So really excited to see everybody there. We got, I'm pretty sure Ryan is the big regulatory, single issue voter. So it's gonna be a lot of fun.
Yeah, I wouldn't want to miss it.
Yeah.
But yeah, thanks again. I'm going to hand it back to Doug right now to close us out.
Awesome, gentlemen. Greg, thank you for joining us. Sami, thank you for moderating this conversation. I think Sami kicked it off well in the beginning, kind of reframing the focus that was put back onto infrastructure and decentralizing post-Tornado Cash sanctions. As Greg said, he will be speaking at Mainnet on the 22nd. You can catch him 3:40 p.m. Eastern time. That'll be on the operating advice stage talking about mainstream firms plugging into crypto. And you can also catch Sami. He'll be moderating a couple panels and then also speaking on infrastructure, Filecoin specifically on Friday for a sponsor session at 12:40 p.m. Eastern Time. So, gentlemen, thank you again. If you haven't bought your tickets, mainnet.events, and a little piece to give back post-merge, a little post-merge giving, 300 off mainnet. Get your tickets now. We're literally days away. And hopefully this was a nice primer, a nice preface for you guys to get you excited and get a little FOMO going before the big event. But again, thank you, gentlemen.
Thanks so much, guys. It was fun.
Thanks. Have a good one, guys.